Hi, this is Dan at Master Trader, and I'm going to review two trades here that they're what we call professional gaps, and then how we use the intraday charts and the pre-market trading chart to help make our decisions on how aggressive, if at all, to enter the position. So these are two trades we were watching this morning in the Master Trader green room, which is our live trading room, and it allows us to get on board with more precise entries because we're in real time. We get to watch the broader markets as they unfold. So I'm going to start here with Starbucks. This was a professional gap down. How we define professional gap is it's one igniting a new move. Look, you can draw a horizontal line here, major support in the low 55s. You can see where it opened up here. Here's today's candlestick, huge volume, steady selling. I got my weekly chart to the bottom right here and monthly to the upper right. Now, if you were holding this long term, that's a pretty ugly wide range bar down. If it closes the month like this of June, that looks like a top. If you were in this for a long-term hold, I'd definitely be going to your trading plan to figure out how to manage it. Tighten stops and or definitely be selling covered calls against it to try to lower your cost basis. But now, I'm going to blow up this 15-minute chart, and then I'll go to a 5. These dotted lines here are my pre-market trading activity. So you can see the very bearish gap down, and my platform here starts recording at 8 a.m., the trading on the ECNs. Very bearish gap down, had a green bar, but 15-minute chart here all the way to the market open at 9:30. You can see it couldn't retrace very much. So that's still bearish. So now this dotted line, you can see this actually sold off into the 9:30 Eastern market open. Then it just collapsed. So the question is, how do you know how aggressive to get in this bearish pro gap down? And I'm showing you how to use intraday charts here to give you that confidence. So now I just switched it to a 5-minute chart. You can see I'm making lower highs here. I'm holding horizontal support. This bar was, actually that's the market open right there. So the very first 5-minute bar took out all of the pre-market support. So a proper entry on this short would have been shorting a 5-minute low. Why? Because you have this the daily is bearish. We just went over that. So is the weekly and monthly. You have this reference point of resistance. The first bar is red and 5-minute low. Look at that. This thing could not bounce much at all. Let's go back to the 15-minute chart. If you were a day trader, this is a climactic buy setup. You definitely would, you just would have trailed this thing. Over a 15-minute bars high, look at that monster gain you would have made as a day trader, trading gaps with us in the Master Trader green room. It still looks lower, so you got to go to your trading plan and figure out, how you want to manage it for what time frame. Now, I'm going to compare this bearish pro gap with this one. Canopy growth, whatever the heck that is. Charlie, Golf, Charlie is the symbol. So let's start with the pattern. This had a bullish multi-week consolidation after breaking out here into the rising 20. I have higher lows. It's kind of an ascending triangle breakout. Yesterday, it closed, the close of the bar made new highs. The weekly is bullish. The monthly is bullish. What happened today? This is what happened today. The top of this red bar is the opening price. So it was a bullish gap from a bullish consolidation with bullish multiple time frames. Now, let's do the same thing we did with Starbucks and look at our pre-market activity and decide how we could have used this to get on board. There, spread it out there for you. So So here's our bullish gap up pre-market over all this resistance from yesterday here. Then, opposite of Starbucks, it went sideways, and instead of breaking out in the first 5-minute bars high, it also broke down. So we are actually looking for a bullish retracement on the intraday time frames. Namely, I use the 5 and the 15 to tell me when to get on board. But the retracement was kind of deep, and we just took it off our radar to watch it later. But now, this is live. It's 2:38 Eastern time right now. We had a breakdown here, a 2-bar reversal, 180 reversal, 2 more sideways bars, and wide range igniting. So when it traded over this breakout right here, 3269-ish, that could have been your entry, your long entry to a bullish stock or option trade, because of the bigger time frames being bullish. But again, I just wanted to highlight the importance of, we start with a compelling pattern, we're looking at the gaps on our daily chart, seeing if the larger time frames are in alignment, and then we're just drilling down to the smaller time frames with looking at pre-market data to help us manage our to try to get that perfect entry. I hope that helped. Don't forget to subscribe to the Master Trader YouTube channel for continuous information on how to make money investing and trading in the markets, and on Facebook so you can get notice of our new Master Trader live show, which is every Wednesday at noon Eastern. Happy trading, everyone.